In this video, I'm going to talk about what are the alternatives to using charts if you're a trader. Stay tuned. Hey traders, a very warm welcome to you. Okay, so if you are a trader, what are the alternatives to you from using charts? So everybody seems to use charts. What are our other options if we don't want to use charts, if you want to explore something completely different? Now, I've got a few for you here, but I haven't included fundamental analysis in this, which is obviously the big one. But if we're traders, generally speaking, analyzing the fundamentals of a company or an economy or anything else like that is not going to yield the results we want as quick as we want. It's a longer cycle play, that. So I know there's some argument there, but I'm putting that in the investing category and I'm leaving that out for now. But I want to focus on some other ways that we can trade without using charts. The first one and the most obvious one, and one that I really like to do, I was doing this very, very actively for probably 5, 6, 7 year period, just flat out, is called tape reading. So even though you can use charts with this, generally the aspect of tape reading is looking at a depth of market, time and sales, showing you the orders on the actual exchange if you're trading the futures or the stock, the trades going through, and making a trade decision based on what you're seeing there. Now, you will use charts as well to some degree to see your support and resistance levels, previous levels, you can do, but some real pure guys, especially who are in prop firms and stuff, will be just looking at that. They won't even be looking at charts. Maybe they look in the morning to remind themselves what the pattern is, but they'll have the chart ingrained in their brain. You know, if you're trading something, I was trading crude oil futures very, very actively, very, very focused. You know, you had them in your brain, the hourly, the daily, the 5 minute, the 1 minute. You could just picture it. You didn't need the chart, and you were just trading purely from that order flow aspect, looking for big orders, things being pulled, patterns on the order book, all that kind of stuff. So that's one way of trading. Obviously, that's very, very hyperactive. It's a scalping type strategy generally. It's not for swing trading, it's for day trading only, but it's possible and very lucrative when in the right conditions to use that kind of thing, tape reading there. So the second one is a fixed percentage or fixed pips metric. So you might not even care about the chart. You might just say, you know what, I know that this currency pair has been rallying strongly. I want to buy it. I'm going to buy it on a 10% pullback, a 30 pip pullback intraday, or 30 pip pullback, or 50, 100 pip, whatever it may be. I'm just picking a number out of the air. You may think that that's the way of doing it. So you don't care what the chart looks like. You just want to get on board, but you don't want to get on board a high. So you're purely just bracketing stuff by saying, hey, I know the average daily move is X. I want to buy in at a top 2 average day move dip. So I'm just having a trading limit order in 200 pips off the high, whatever that may be. You don't care what the chart is. You just want to get involved in it because you believe it's in an uptrend. Same with the percentage if you're in a stock, for example. You're waiting for it to pull back from a high in X% and you want to get involved in it. That's going to be more of a swing trading type thing because day trading, that's going to be a little bit different, but I would say that's more of a swing trading type thing. And you know, I know guys who have done something similar to this. Yes, they've kind of integrated charts with it for the guys I've known, but you could quite possibly trade that completely raw if you were logging the prices every day and the highs and the lows and doing your own kind of statistics, even just watching it visually priced as opposed to a chart. I think this would work reasonably well for you under the right conditions. The same with all strategies. Okay, number 3, volume. So okay, I kind of digressed a little bit here because I know that generally speaking we want to see volume on charts, but let's say we didn't have a chart and all we had was a volume print of, let's say, the morning, lunchtime and afternoon, and we could see exactly, you know, what the volume was compared to previous days, or if we're having daily volume, maybe we would only get involved if we saw an up day and good volume, we'd buy on that. You know, it sounds simple, but you know, these are the simple strategies that, you know, you hear someone who's made, you know, serious cash just using a very simple strategy. And I think, well, I wouldn't choose it myself, but I think if someone said to me, hey, you know, I don't use charts, I literally look at the volume done on a stock during a day, and if it's, you know, more than the usual amount and we get a key move and we're at a level that we haven't seen for a while, which I know, I will buy it. Whatever. I think that's a strategy that I would say, yeah, you know what, you're probably making money out of that. So not my first choice, but it is there. And number 4, we've got here other data. What do I mean by other data? I mean that you can trade based on how other people are positioned. So forgetting about your chart, let's look at an example. traded position, float, number of shares in the float, and the number of shares held short. I'm talking these last, really, this is more for stock specific stuff, especially US where you get this data, although you do get UK data on short float and number of shares in issue. So what I mean by that, so if you have a really explosive 2 or 3 days and you've got a low float, in other words, there's not very many shares in issue, you may think that's something you want to buy because the volume available is low, and that could cause, you know, much more of a price spike higher. So you don't really care what the chart is doing, even though visually it's probably doing that. You're just saying, hey, you know what, I want to buy it because I see an explosion, but I know that there's not very many number of shares available in the float, and that's going to cause an extra spike. Same here, we could say the same thing. We don't care necessarily about the chart. We just know that the number of people who are holding positions short, and we can get that stuff from FinViz, or we can get it from Short Tracker, or if we're doing UK shares. We say, hey, listen, all we want to do is buy stuff that is up 3 days in a row, for example. I'm not saying this as a strategy or not. 3 days in a row and has got a high short float. In other words, or is up more than X% in a period of time, has got a high short float. We don't care what the chart looks like. Just know a lot of people are stuck short on it, and we're going to use their hopefully momentum buying to ride the train. So we didn't need a chart. That's something we could do. And trader's position could be something like, hey, we've watched. This could be maybe some sort of small cap that's coming over social media, and all the punters are buying into it, a bulletin board type stock. We see it going up. It's no news. It's up like 400, 500% over a week or whatever it may be. You're earmarking it for a short, assuming you can borrow some shares, and you don't really care what the chart looks like. You just know it's up ridiculously. You just know all the fanboys are on it, but you just know that when that buying dries up, this thing is going to plummet. So you're just waiting to see, you know, when the buying dries up, and maybe get an alert for, again, X% pullback from the high. If you can borrow shares short, you hit it short, you're watching to see what the bulletin board guys are doing. They'll go quiet. Generally a thing will fall low. I might do another video on this a little bit more detail, because that's a pretty interesting strategy. Okay, final one, guys, is the reprice scenario. So that could be, hey, I don't care what the chart is doing. I'm just looking at something like a surprise interest rate announcement. I'm looking at a surprise jobs rate announcement for currency pairs. So you're only trading after you see a surprise, and when you see the surprise, you're trading it in the direction that you believe it's going to go, or you're trading it against the direction you believe it's going to go because you think everyone's expecting that. You get what I mean. The other thing could be a stock. You're waiting for a stock to have really good earnings after it's had a series of bad earnings. So as soon as you're doing that, you're buying the gap up the next day. Again, you don't care about the chart. You just log in kind of earnings. Or you can flip it on its head as well. You could have a stock that's, you're trading on really good earnings, then all of a sudden trades bad earnings, you go short. Anything kind of like that, where you literally don't care what the price is saying, you'll just want to trade a difference in story, if you like, for the stock or the currency pair, the commodity. That could also be, very quickly, guys, that could also be something like a commodity where news comes out that perhaps the harvest isn't as good, or there's a weather issue, or there's some sort of pest or something eating the plant, or whatever it may be. You get the point. Something that fundamentally could change the valuation of what you're trading. So there's just some ideas, guys. Any you've got, stick them in the comment section below. Always interested to hear if you think there are better alternatives. I've probably missed a few, but just keeping this to these main ones. If you like the video, of course, give it a thumbs up, much appreciated. And of course, if you haven't yet subscribed, consider doing so for more videos from me and other traders on this channel. Take care, manage that risk. I shall see you in the next one. Bye-bye.